For business owners, financial stress is the worst level of stress.
I could upset a few people here.
Keep finance simple. Take control of your finances, reach your business goals, and avoid sleepless nights over cash flow. Who advises the people that advise the businesses on money and strategy? Rob Boll does.
But the big thing is keep it simple. Those are the only things that any business can really have an impact on.
I mean, on a micro level, any small business could do this.
Yeah.
With a rich background in finance and business strategy, he has been a guiding force for SME business owners, empowering them to make strategic decisions that pave the way for lasting success.
JP Morgan, they're one of the most successful American banks out there, and they always wanted to be the first bank to have their results out every quarter. This is important.
What are some of the other financial mistakes that you've seen in business?
There's many.
Turnover is vanity, profit is sanity, and cash is king or queen.
Yeah, absolutely.
He's a seasoned finance expert and former vice president at JP Morgan. Let's do this.
If anyone is struggling with the business is not delivering the return they think it should be, or they're struggling with cash and constantly not making progress, then I think that's the time to have a conversation.
All right, Rob, when it gets to business strategy and business finance, what is excellence?
Business strategy and business excellence. I think for me the biggest thing is when I talk to companies who haven't got a financial strategic plan, they've got an accountant, they've got backward looking information that tells them what's happened and where they were. The biggest thing around strategy is linking everything that you want to achieve, your goals, your ultimate end goal, to the finances, and making sure you've got visibility, you're tracking that what you think's going to happen, what you want's going to happen, actually happens, and that's the forward-looking view. And of course, you've got to track that against what's happened in the past, but you've got to move beyond that and go, right, the future is there. Let's start planning towards that and have that visibility.
Quite like that, linking the end goal to the finance. And what else you said is the accountant's putting a report to you, which is backward looking. It's very common, the backward looking report. It's not always common, by the way, is it?
I'm often surprised because you think clearly it should be for everyone. But some people run their business off a bank balance. If there's more cash in the bank than they've had before, they're going in the right direction. But just management reporting is important. You've got to report on the past, but you've also got to link that to where you're going and where the future lies.
Is that excellence then in as regards finance and strategy? Is it excellence getting the reports from the past, linking the end goal, the future end goal to finance? Is that excellence when it comes down to finance and strategy?
I think it's the forward-looking thing and making sure you know where you're going and you're measuring against that. And to me, the backward-looking thing is get it as up-to-date as possible so you can actually make decisions. Before working with SMEs, I used to work with financial service firms, and we used to do daily P&L. So every single day,
daily P&L,
you knew how much P&L you'd made, where the state of things were.
All right.
And to me, it's that speed at which you get the information. That's probably extreme for certain businesses. But it's that how quickly can you know what's happened and react to it because something's going in the wrong direction, or your profit's not where it should be, you're overspending, or you're using too much cash, more cash than you expected to.
Look, we've set the tone already. This is going to be like cash, finance, daily P&L. All right, so where do you start when it comes to finance then? I mean, you mentioned daily P&L there. I mean, it's pretty intense.
It is, and it's not relevant for every business. I mean, there are certain companies now, companies that are selling online, they're spending a huge amount of money on advertising. They should be looking at their kind of return on ad spend like every day.
ROAS.
Intraday, ROAS, that's the one. So that kind of thing is clearly, you've got to look at it because quite quickly you could be overspending or missing a trick. And I know for those kind of things, you're looking at trends. It's always kind of 7-day trends. But the more up-to-date your financial info is, the quicker you can react to it and understand what's going on. But the big, there's lots of things I've said there, but the big thing is keep it simple. You can't look at everything every day. You can't look at everything every month. What you've got to look at is what's the most core drivers for your business for the phase you're going through right now. So some businesses that are going on a particular phase of growth or looking to improve their profit margin or making sure they're building their cash reserves might be looking at something different to companies that might be doing something else. So it's identifying what's most relevant for your business now, having that as your key metrics that everyone that's got oversight or responsibility for that can look at and, be on the same page.
Well, look, you place part-time finance directors and part-time commercial directors in businesses that are looking to grow. So from that regard, finance and strategy, really, because the commercial director is a strategic role. How do you keep it simple? What is keeping it simple?
I think it's a tricky one, because often we're talking to people that some people we talk to are very commercial. Entrepreneurs, people running businesses, very commercial. They get things very quickly. We also work with creatives, and sometimes they've got no interest in that. They just want to make beautiful things and use their creative energy.
Is there two types of entrepreneurs then?
I think there's more than just two, I think. But that one extreme, your creatives that have got no interest in, they've clearly got an interest in it, but they're not very good at linking what they're doing to being commercial about it. And then you've got others that are super
Let's go with the creative, though, to start with, because I get it. What does keeping it simple, I'm just going with your words on this, what does that look like from a finance or strategy perspective for a creative?
Yeah, no, good question. So I think for me, you've got to, again, whether it's any type of entrepreneur, you've got to understand what are the drivers for that particular business and make sure we're clear. If the business, when we're looking at the financial strategy, we're always improvement. So improving growth, improving profit, improving margin, improving cash balance. So what's going to help that business improve and how are we going to measure it? That's one of the key things. So for a creative person or someone that's probably quite visual in how they kind of respond to data and conversation, graphics, dashboard, but linking it to what it's telling them. You see so many, there's a lot of these dashboards that attach onto cloud-based accounting systems like Xero, and they're all very good, but often they look good, but it's like, what do you do with that info?
Yeah, what do you do with it?
So this is all about...
That's most of the challenge for small business, isn't it? Presenting the numbers in a meaningful way where you're actually going to do something with it.
Exactly. And that's where this concept of just focus on improvement, to me, is the simplest place to start. Where can you improve whatever metric is relevant to your business right now? How can you improve that? And that's not just for finance team. A lot of people think about finance and go, our finance team deals with it. This is talking about, this is what the finance team is reporting and recording. How are we going to improve that metric? Everyone's got a part to play in that, for sure.
Yeah, I mean, communication's popping up in my head there. I've just made a note of that point, focus on improvement. I quite like what you said before that, actually, and I managed to capture it just in time. Improving profit, margins, and cash balance.
Yeah.
Is that as simple as it gets?
It is really, and ultimately, they're all linked, right? So your cash is going to be a driver of a number of things, but there's not many things that are going to drive it. There's 7.
I'm really passionate about this subject, right? Yeah. A lot of people aren't passionate about the subject of finance, but
I think people find it confusing, and this is where you've got to keep it simple. And if you can break it down to whether it's 7 drivers or 5 drivers or the drivers that your team or your part of the business is responsible for, everyone should be able to engage with that and understand it. But seven drivers for cash, in my view. Revenue. So how much revenue you've got, and
sales.
Yeah, sales. You've got your margin. So these are all the things on your P&L balance sheet. So your margin around how much you're buying stuff in before you sell it on. And then things that drive your cash, purely your balance sheet side of the equation. So how quickly you're capturing money, your accounts receivable, your working capital, sorry, this is all part of working capital, but your work in progress, or how much inventory you've got. So stuff that you've done, but not
if you're
billed
product
for.
Business, your inventory, service
work
business.
in progress is the stuff that you've done, but you've not necessarily billed for if you're a professional service company. And then when you're paying people, how quickly are you paying people? Are you overpaying? Can you slow that down? Those are the only things that any business can really have an impact on. And below that, there's clearly different levels of that. But if you start there, there's not many things that you can have an impact on. And everyone in the business, especially on the senior team, should be able to impact those 7 drivers.
Especially on the senior team. I've made a couple of things. Let's attempt to de-confuse things, to unconfuse things, if whatever makes sense there. Because, I mean, why is it so often said accounting is confusing? Is it because there's all different terminology? Turnover, revenue, sales, they're all the same things.
I could upset a few people here. But I think people that study accounting, become qualified accountants and get into that, feel they have to generate stuff to look as if they know what they're doing. And I think it probably applies to other things as well.
But let's be super clear here. Yeah. You've got a vast experience in this finance.
Yeah, and I'm a qualified accountant. So I know, there's lots of things you could really get complicated, and sometimes you need to get complicated. Yeah. That's the nature of the business. But when it comes to the SME companies I now work with, keep it super simple. Keep it so simple, and don't overcomplicate things with lots of reports that might look pretty, might look comprehensive, but if no one understands it.
What's on the best report? I mean, let's just brainstorm that for a second.
Yeah. Well, again, it obviously depends on the business, and this is what I mean. It depends on what cycle your business is going through, what it's trying to achieve. Because some people will be going for growth. Some people will be trying to go, we've got a problem. We've got too much overhead. We've got too much expense. We're not making enough money. So you've got to go into, right, we need to take control of this. We need to improve profitability and gain more cash reserves because we're burning cash. That, to me, would be a separate, a type of metrics you want to look at and monitor, which is different to a company that's just going for rapid growth and might be looking to spend more to acquire more clients.
Yeah.
Might be, knowing that they're going to burn cash because they've got growth coming. Therefore, they've planned that. So there's different metrics there to look at.
Depends on the plan then. Or you said 100%. Depends on the cycle, depends on the plan, what's in there. This concept of take control, that surely doesn't depend on the cycle. That could be for everybody though, couldn't it?
Yeah,
I mean, that's part of the report, is taking control.
Yeah, 100%. And the control is really having visibility, isn't it? Having visibility and confidence that you've got accurate data to make decisions. I think some of the things that I hear with companies is, we've got a finance team. We look at, the founder, the management team might look at the output from the finance team, and they, because of the way their brain's wired and what they know just about the business and then what they're passionate about, they know it's wrong. They know that doesn't make sense, and they lose that trust with the finance team. And for me, you've got to have accurate info. And if you can't get accurate info, you need to address the systems you're using, the processes you're using, which impact finance, and potentially look at the people you've got. Are they capable? Especially when the business is growing. Business starts off, it's relatively simple, but as things get more and more complicated, you overlay different products, different services, different systems, different offices, whatever it is, things get more and more complicated. So you've got to have a step back and almost go, right, how do we simplify every process that impacts finance so we can get to a clean close of the numbers, either on a monthly basis, weekly? Daily's probably over the top for a lot of companies, but just how do we get all this data in and make sense of it quicker? Sometimes
when you're starting something, there is an argument to actually go bigger on it, to like start almost doing it daily, just to get the level of focus and intention regarding that. I mean, it's proven that you'll actually end up going faster and get to where you want to go faster if you go bigger. Really at the start, it's got to be consistent steps afterwards.
So as an example, I used to work for a big US bank, and they always wanted to be the first bank to have their results out every quarter.
Really?
We've got to be the first bank that gets our results out every single quarter.
What did you learn from them? Are we allowed to name them or not?
I'm assuming so. JP Morgan. There we go. Yeah, so JP Morgan, they're one of the most successful American banks out there. And I was working in one division within the London office, and our focus was get, for the whole bank, our results out to the market before anyone else every single quarter.
And did they do that every quarter?
100%.
What impact do you think that had on their success? I'm guessing it had a lot of impact on culture and mentality.
I think there's a couple of things there. One is, this is important, and we want to be leading the way in terms of showing ideally how well we're doing. And I think normally they were quite successful at that. But just be confident, we're going to tell everyone before anyone else knows or anyone else does. When it comes to, I guess, the interesting thing for finance, from my experience, one, it was hard because every quarter, you've got to do the hours, you've got to potentially do some weekends to just get everything done.
At the last sort of minute, well, it's not last minute, is it? It's because end of quarter comes.
Yeah, you've got to just get on
and
it.
And the turnaround, are we talking a few days and then it's out?
It's probably a week, maybe.
So within 7 days of the quarter.
7 to 10 days, you've kind of done everything.
And they were always first.
Yeah.
Wow.
But at the same time, the rest of the quarter is probably freed up to do other stuff because you've done that compliance reporting aspect. You can then go on to, in my view, okay, what do you learn from that quarter, and could we do it better next time, or speed up something, or what caught us out? But also, how can we improve other things in the business? To me, finance is a function. Deliver the compliance stuff, which in a regulated banking industry is hugely important.
Yeah.
But you've got to do the regulatory compliancy stuff, or whether it's VAT returns, whatever, get that data ready and done. Then it's, okay, how can we help the business? How can we help the business improve what they're doing? Who do I need to speak to in the business to help them? Give them information that's going to help them make decisions, or whatever it is that they're working on. So if you extend the period of time you're doing the compliancy stuff, the month-end routine stuff, the less time you've got for the fun stuff, in my opinion, which is actually helping the business drive forward.
So there's the whole reporting thing, and then there's the decision making, and then there's having fun implementing the decisions.
Exactly. Yeah, it's the strategic piece, isn't it? That to me is the interesting bit. You don't, if all you're doing is the transactional, just adding stuff up and looking at that. That's a lot of that should be automated now. It's junior people in a finance team doing that. I want to be looking at strategic things that are going to help a business push forward.
I quite like that though. As a three-piece. I mean, on a micro level, any small business could do this.
Yeah.
It's the straight away, like every month.
100%.
Let's get that report done as soon as we can.
Yeah.
But at the end of the month,
yeah.
P&L, balance sheet, all reported. Let's make some decisions on it.
Yeah.
And let's have fun implementing.
Yeah, exactly. Yeah.
And let's make sure that we're on track for the plan.
That's the thing, isn't it? The quicker you know how you've done, the quicker you can have confidence that you're on plan or you're not. And if you're not, make some decisions or do some things to get back on plan.
Right. Clearly, look, this is for every business listening in right now. This is every business. I mean, there's no getting away from this. The language of business is logic.
Yep.
Ultimately, it comes down to a set of numbers in all businesses. What is an FD? You put part-time FDs in. So what is a finance director? For some small businesses listening right now, that might feel like a step too far. But let's just understand what a finance director is.
Yeah, sure. There's probably a few ways of describing an FD, but for me, it is someone that's got a forward-looking commercial view of the finances. So someone that can look at the numbers of the business, understand where the business is going, and help ensure that period of time we're looking at ahead is going to be a good performing period. And that would include, if the business wants to scale up, wants to do things like an acquisition, invest in some new equipment, invest in new staff, invest in a different location, make sure everything works.
Well, hang on a second, because my second question was going to be, what do the best FDs on the planet do? So is that some of what they do? Or?
I think that's the standard stuff. The standard stuff is everything I've just said.
So what do the best ones do then? If that was the standard, what do the world's best FDs do? So
I think for me, and what I encourage all my team to do is, get into the head of the business owner, founder, management team, and be able to go that little bit extra and actually think, okay,
guide the decision
making, but also give them the confidence that they can take on, whether it's a bit more risk, calculated risk, or just push the boundaries of what they might have done before. And the reason I say that, and I think this is so important right now, is the pace of change is so quick. And I think if businesses aren't pushing themselves to push those boundaries,
yes, really good point,
then you potentially going to miss out to a competitor or miss an opportunity. So to me, the business is, the end goal is the important thing. So where are you trying to get to for this quarter, 6 months, 12 months, 3 years? Understand those time horizons and just be in a position to go, great, to get there, this all stacks up, your forward-looking budget, financial model works, but what if? What if we did more? Well, two things to this. What if things went better? Or
so does
could
the
we do
FD
more?
pose that scenarios?
And the negative side as well. So there's that kind of
So what if positive and negative?
Yeah, 100%. Yeah.
All right, let's go the other side then. So commercial director, even though it has been around a long time, actually smaller businesses are considering commercial director. What is a commercial director? I'm going to ask you the two questions. So just what is a commercial director? Yeah. What do the world's best commercial directors do? So what is a commercial director first?
So to me, what a commercial director does is really help a business understand what strategies it can put in place to help it grow. It's about growth and making sure it's got some clear strategy to make that happen. And that can cover a whole range of things from, understanding how to acquire clients, maintaining good relationships with those clients, all the way through to how you do operations and process around those. So that there's a whole range of things that could cover, from pricing strategy to how you actually position yourself in the market against your competitors, understanding, are you hitting the right points in terms of your marketing and all of that.
Understand strategies to put in place to help the business grow. So acquiring and developing clients, customers as well, the business model.
And products, services, everything really. It's just having a perspective.
So what do the world's best commercial directors do?
So I think the best commercial directors that I've seen and worked with will look at everything and quite quickly get to a point where we clearly can't do everything. So what should we do that's going to have the biggest return without getting distracted? And then I think, especially when it comes to SMEs, you've got entrepreneurs who like shiny things. They like going over things they've seen or heard. Commercial director can almost give a bit of that balanced view of, look, if we could do all those things, amazing, but we're restrained by whatever factors they are: capital, resource, time. What can we do to make the biggest impact for this business and make sure it works? To me, that's the key.
I love it. I mean, holistic decision making across the best. They can make the decision based on the whole thing and no distractions. Tunnel vision. Kind of irrefutable, that, isn't it, for the world's best? So
and I think part of that is getting everyone in the business on the same page and behind that plan.
How do I know I'm ready for a finance director?
For a finance director, I always encourage people to have a conversation so they can kind of get a feel of to what they might be missing right now. So the smaller end of businesses that we work with, probably 500,000 turnover, all the way up to much bigger companies. But if anyone is struggling with the business is not delivering the return they think it should be, or they're struggling with cash and constantly not making progress, then I think that's the time to have a conversation. And you don't need a full-time FD at that point. You might just need some pointers.
I mean, that's the advantage of part-time, I mean,
of course.
This is a couple of days a month or whatever it is. You can have the competence of a senior figure in a huge business in your business.
100%.
Expertise.
And it's not just you're paying for someone's time to do reporting.
Because they are doing it for you.
Yeah, they're doing it. I mean, an FD shouldn't be doing hands-on transaction stuff. They'll be extracting data and helping you make decisions.
Will there be a finance manager or a financial controller or something like that in a business?
Yeah, so I mean, some businesses we work with would literally just have a bookkeeper that captures everything, and then we would generate information on the back of that to make decisions. Other companies might have finance manager, controller, or even a junior FD, an FD that's doing most of it, but not quite to the level the business needs to be at. And I was very fortunate when I was working in big companies. You have lots of people you can use as mentors, go for advice. in a small business, if you're running the finance team, there's no one else to go for or to go to. So having a part-time, more experienced FD or finance lead can offer some value there as well.
I did a podcast with a gentleman maybe not so long ago called James Circus. He's he's an entrepreneur. He's got loads of businesses. He's sold some businesses for, you might even know him from some of our events that we've been to. But he's sold businesses for multi-millions. And he's not quite creative. He's an entrepreneur. He's a fast decision maker. But one thing he said is, even if it meant him going into debt earlier on, if he could go back, he'd have just got an FD in as early as possible, even if it meant that he had to borrow money to get it, so that he could control the finance and move faster.
Yeah.
And he's already a ridiculously fast mover, so it was quite a powerful statement that he made.
No, it's very powerful. I like that. Can I use that? Just to add to that, I think the key thing with anyone you're bringing into the business at a senior level, they've got to add value and give a return. So to me, if you bring an FD in, it's not a cost, it's an investment to take that business up a notch. And I think that should apply to any resource. But for anyone looking to us to get an FD or commercial director, it shouldn't be a cost. It should be an investment to get the business to the next stage.
I'm only making this up. If you've got both of them, it's like you've almost got a board kind of straight away, really, isn't it?
Yeah, 100%. Yeah, and it's not just the time you're getting of someone; it's all their experience. You've got people that are joining your team who have been there before. Right. They've made mistakes. They've seen others make mistakes, and that's what you're getting. You're getting someone that's seen all of this other stuff in other businesses, and they're bringing that learning to your business and almost accelerating your learning as the founder for bits you might not be aware of.
All right, let's come back to some finance here. So look, we've had a brief introduction here, but let's go back to. So a good teacher of mine is a gentleman named Alan Miltz. You probably know about him. He says this: turnover is vanity, profit is sanity, and cash is king or queen.
Yeah, absolutely.
Why is cash king or queen?
I'd say cash is the thing that can stop a business, right?
Cash flow kills big businesses and small business, if you let it.
100%. And I often, we have companies that come to us and say we've got a cash flow issue. And to me, I'm like, it's not a cash flow issue. It's something you didn't do.
A management issue?
6 months or whatever.
Decision-making issue? Or?
Yeah, something's happened in the past, which means you're just about to run out of cash or you have run out of cash. So to me, that's all preventable if you're monitoring it and looking at it. So cash is the one thing that if you get to that point where you run out, you stop, you're dead.
It's a big cause of stress. Apparently, according to some research, because I'm sure that other people will correct me if there's some other research. According to some research, for business owners, financial stress is the worst level of stress. Where they're up all night, sweating, can't get to sleep. And is that cash flow? Is that just creep? Because it can creep up on you. Bad situations can creep up. It can progressively get worse.
Yep.
What stops people looking at the cash? Is it the confusing state?
I think it's often not on the radar. When we're talking about cash, it's part of your balance sheet. Yeah. Every management team meeting normally talks about P&L, profit, revenue, P&L. They don't often talk about balance sheet.
Yeah, when I speak with the experts, the balance sheet is the much simpler one of the two. It's it's the easiest one of the two. Yeah. It's the one.
Yeah, no, 100%. And I think that's the thing that people get caught out by because they assume it's okay. And it's we can have good profit. We can have good growth, but if that's not coming in the cash because you're spending more cash to make that profit, or you've got slow cash coming in and you're spending cash out to buy product or pay for services, that's when you can get caught out. And there are times in the economy where we have a cash squeeze, so everyone starts slowing down on paying their suppliers, and that's when you can get caught out, because if you have that cash that's due to come in and then suddenly something stops. I know there's a few companies who I know have relied on R&D tax credits, so they've spent on innovation. They're expecting every a steady flow of cash to come back in through that government support. That's slowed down because HMRC are being more diligent about those claims, and they're slowing down payments out. And some people have just gone, we were relying on that, and it's just stopped. And that can happen with any customer,
Right.
anyone that's just suddenly stops paying you, or a bank just pulls the plug. So many companies have been in a situation where the banks just suddenly removed a credit line. And if you're reliant on that, that can just, stop the business.
And then it forces you into decisions.
Yeah.
And there's instant pressure, there's panic for some people. But sometimes that's a good thing, isn't it? To being forced into a situation where you've got to control the finances.
100%. But I think you can avoid that by, having a mindset where every activity you do in the business should be a cash generating activity. So not just profit making, but it's a cash generating activity. And if you have that mindset and apply it, and everyone in your business does the same.
Cash generating activities. Like what?
Well, if you're, let's say you're going to launch a new service, new product, new service within your business, if you're a professional service, and you go, right, we're going to have to put some money out the door for paying for stuff, whether it's people, whether it's marketing, whether it's some kind of stuff you've got to pay for before you get an income in. You've got to look at it and understand, okay, when are you going to get the cash back from that? When's it going to start generating cash? And if there's a long cycle to start it being positive cash generating, okay, how do you change that? Do you need to spend money out the door, or can you negotiate your payment terms with your supplier, or look at other ways to generate a guaranteed income from that product service before you put money out the door? That's just thinking about it a little bit differently. Some companies will go,
it's time though as well. You've got to put time, focus and effort into those kind of conversations. That's what that's what I'm thinking of there. How do I go about learning that? So layperson, average business owner, how do they go about learning about finance, P&Ls, balance sheets, cash flow statements?
Well, the obvious answer for me was get an FD to kind of take some of that pressure off, but they should be educating the team on the important bits as well. I mean, there's, if someone's running a business and's got no knowledge of that kind of thing, then I think that's a dangerous position to be in. And accountants should be able to offer some simple advice.
Yeah, well, look,
there is simple steps to take, but as companies get bigger, often the numbers get bigger and the cash can come and go quicker than it's ever been.
The language of business is logic, it's finance. And I like this example. If you've got two people in France, in Paris, and they had to get from one side of it to the other, and one of them could speak French and the other person couldn't speak French, and they're not allowed to look at any signs, they're only allowed to speak to people to get to the other side, to navigate, who's going to get there faster? The person who can speak the language.
Yeah.
And I do think even getting an FD, you've got to be able to understand the language as well yourself.
Well, an easiest example of how to help understand it is to start looking at it almost as a scorecard. What is your ability to generate cash?
That's the language that's used in a lot of these businesses. What's the scorecard?
100%. And I think that's the way to get either you as the founder of the business or people on your management team or other people aware, is put it up there and say, this is important to us, that we need to be generating cash as a business, and this is how we measure that.
So let's say to date, it's not been important enough for me to put that up on screen. How do we start going about that in the business? Do we just randomly change the meeting? I mean, there'll be people listening right now that need to get this scorecard visible.
Yeah, no.
What's the first step?
100%.
What is the first step?
The first thing is to look at it. Okay, so if balance sheet and cash balance isn't on your management team agenda or even looked at, start looking at it.
All right. So management team agenda. Let's go through that. What's an ideal agenda on a management team? Let's just go through that.
From a finance perspective, to me. And the thing is, it's not actually just finances, but it's things that link into finance. So, if you're looking at revenue over that period of time, it's going to be driven by your sales activity and what's happened there. So that links into
Critical
your sales
activities.
team. Yeah, exactly. Anything to do with margin, so monitoring, has a particular quarter been different in terms of the margin you've achieved and what's driven that? Is it a particular product, service? Where's that difference come from? And then the other big thing is, are you collecting money in quick enough? Have you got anyone that's not paying what they should be? And that's not just for someone in your finance team to deal with, that's for the salesperson, in my opinion, to deal with. Because there's no point in your sales team selling stuff if no one pays. And I think that's where you've got to bring in those other departments to
margins, collection. How do you, because we're talking about educating the team here.
Yep.
What's key to educating the team to control the finances?
Well, I think the first thing is just, as I said, looking at it and having it monitored on a dashboard. And you mentioned Alan Mills, so he talks about gamifying it, turn it into a game.
Yeah.
Your game for your team is to generate cash, and there's a scorecard, and you're playing the game of cash generation. And I think that's something you can, to me, one way of doing it is, look, we've got a problem here. We think we're not getting money in quick enough, and look at the trends, look at, okay, this is where we are, this is where we should be, and pick a number that is either where you should be or where you feel it should be, right? And then go, right, how do we get there? How do we make sure we improve this particular metric? What are the ideas that in most cases the team will have, but unless they're asked, they're not going to.
I quite like that. I've scribbled that down as in a step-by-step. Number one, look at it, dashboard it monthly. Number two, gamify it. Look at the trend, set a target. Then how we're going to achieve this target. Let's come up with the ideas now and then get to work.
Exactly. Yeah.
5-point system.
There we go. Perfect. 5 points.
What mind shift? This is a big one. Revenue focus versus profit focus. What mind shift does someone have to go through from being more bothered about sales? Because quite frankly, a business that's turning 5 million with a 500k profit is better than a business that's turning over 20 million with a 500k profit. Yeah.
100%.
So, what mind shift does someone have to go through to move from revenue focus towards profit focus?
Well, I think the big question for me is the big thing for me is there's no point in having revenue if you're not making the right level of profit. And I think for whatever revenue metric revenue target you've got to make sure you understand what that should do in terms of linking to
what's the profit target.
Exactly.
It's normal though in business, isn't it, for the crystal clear revenue
100%,
targets, just not as clear on the profit targets.
But there's so many early stage companies with great ideas that seem to attract funding that profit's not even on the horizon. It's revenue, and people are willing to fund that. And for some companies,
is that because they're trying to get a market share?
There's partly that, but also it's people thinking
that's not the norm, though, is it?
Not the norm.
In the 5.5 million businesses in the UK, I mean,
it's not the norm, though.
There's millions of businesses who would like some funding. Maybe we should talk about funding, actually, and attracting funding.
But I guess one of the things that causes a problem with is when you've got companies that are funded at a different scale to normal SME companies that you're just referring to. These companies are still trying to compete for the same customers. So someone that's got a massive budget to spend on advertising or marketing to acquire customers, we've got smaller companies trying to acquire the same customers, but they're still trying to maintain a profit margin, etc. And you see some of these companies that go bust doing that, made.com and all those, those kind of things, because they're chucking money at acquiring customers, but they're not making profit. And suddenly they run out. They run out of that runway. They run out of cash. And
then they have to try and get some more funders and some more investment.
Yeah, exactly.
Dilute the share in a little bit more. No, you hear the stories, don't you?
100%. And I think, so the answer to your question about mindset from revenue to profit, to me, revenue growth can be hard, right? You've got to keep finding new customers. You've got to keep selling them more or encourage them to spend more with you. Whereas if you had the same customer base and you could squeeze some more margin out of them from gradual increase in prices or making sure you're delivering things that they're willing to pay a bit more for, or you're just being super clever about, okay, are we buying the inputs to this product? You know, your cost of sales, can we get that down and improve our margin? Can we reduce our overhead? Can we improve the way we do things with maybe technology and less people to improve our profit level? Those things are more in your control and often more predictable than we're going to try and acquire another whole bunch of clients. So I think going for the easy option isn't always just revenue growth. And the other thing is, I've seen so many companies that have great revenue, but when you look at it, there's only a small portion of it that's actually driving profit. And there's a bunch of it that's just probably giving you more of a headache and costing you more than it should be. So simplifying the client mix or the mix of revenue you've got to make sure it's all of a consistent quality of margin is a quick and easy way to improve that position of the business, in my opinion.
I tell you, I made a couple of notes there about what you just said. And you definitely described someone who's definitely more holistically looking at the business in the second example rather than just focusing on next sale, that number. You talked about improvement. You talked about customer service. You talked about delivering excellently to your customers and keeping them and working out what you're going to do next to improve it. You use the word improvement a lot. So I think you're considering the whole picture a lot more, which is part of the mind shift.
Yeah.
I'd not pieced it together there. I was thinking simplistically like set a revenue target versus set a profit target. But look at that in between. You got to consider the overall, what you're delivering to the customer.
Yeah, no, 100%.
Retention of your customers becomes super important in profit focus, doesn't it?
It does, because a customer that you've got is expensive when you lose that customer. And if you can just be a little bit more focused on how you might squeeze a bit more profit out of that customer.
Is it any different for a product business versus a service business? Or is it the same?
I think when you come into it at the top level, business is the same, right? Yes, there are some nuances between product-based business and a service-based business, but at the end of the day, it's the same thing, right? You've still got to make sure your customers are happy and you're consistently delivering something that's profitable to you, whether that's a service or a product. So ultimately it is very similar in approach, but some small nuances to think about, which are going to be different for a product-based business in terms of how you drive profit.
What are the keys to a recurring revenue stream?
So I'm just trying to think what would apply to any business. To me, having a loyal customer base that keeps wanting to come back has got to be a top thing, right?
It's got to be, hasn't it? A loyal customer base that keeps wanting to come back. So that whole customer service piece.
Yep.
Sorry, it's not even customer service anymore. It's customer experience. Yeah.
Yeah. Customer experience.
UX.
Yeah.
UX.
Yeah. That customer experience piece, I think, is a huge thing, and I think some businesses do that very well, and there's some examples out there of well-known companies that do it amazingly.
Yeah.
And I think often SME companies overlook it because it's not necessarily hard work once you've got that kind of mindset around this is important to us, but getting to that stage can be hard work because you've got to get everyone on the team embedded within that customer comes first, and that's how we're going to make our decisions to make sure we keep and maintain those customers. The right customers. You don't want to keep customers that are costing you money.
What is the right customer? What's the wrong customer?
So I think for anyone's business, this comes down to, I guess, the link to marketing, isn't it? You should understand what your kind of avatar is, who you're aiming for, and that's got to be ultimately because it's going to be a profitable client that you can serve well. If the opposite of that is a customer that's more draining on your time and more needy than it should be and reluctant to pay, then that's the kind of thing you don't want, right?
What should you do if you've got a draining customer that's needing on your time?
I'd probably get rid of them, sack the client, sack the customer. I think it's a difficult thing to do, and I think people struggle with that concept of either rejecting a client in the first place because you think they're going to be the wrong fit for you.
There's a trap though there, isn't there?
There is. But
you fall for it.
If they are not a profitable customer, for various reasons, what's the point? We're all in business to make money, and if you're delivering a service that, in your opinion, is what it should be, and they're still not willing to pay for it or being awkward and difficult, then go and find someone else. And I think in most cases, when people do that review of the customers and think, yeah, these are the bucket of customers that we really don't want, and you move them on, I think that's a real motivational thing for everyone in the business, because they know those are the painful clients that take up all the time.
Let's categorize that actually as a financial mistake. Let's just call this a financial mistake, taking on the wrong customers, saying yes to the wrong customers, keeping servicing the wrong customers. Let's just call that a financial mistake because it has a huge impact on time and money. Yeah. What are some of the other financial mistakes that you've seen in business?
There's many.
The biggest ones.
Yeah, biggest ones. I think, and lots of entrepreneurial businesses and the people that lead them get very optimistic about how things are going to work out, and are very quick to put money into things or think this is what we should be doing, and often are too slow to stop, put on the brake and go, no, we shouldn't be doing that.
It's amazing, isn't it? I mean, look, I've just had another podcast that I've done not so long ago, and again, it comes up. Blind optimism is a big financial mistake. Yeah, just excessively optimistic.
Yeah, and I think this is where some of the conversations should happen between, founder, MD, management team, and finance, is to understand, right, this is what you think is going to happen. And that all works out and makes sense if it does happen. But at what point do we have to say, no, this is not
what
the right
the
way
rules?
To go? I think just trying to keep it simple. I mean, ultimately, if you've got a profit margin you're trying to stick to,
maybe it is that. You're right.
How long are you willing?
At what point do we say no?
Yeah,
maybe it's just that question. At what point do we say no?
Yeah. And that comes back to maybe the cash generation thing is the right thing to look at. How much are we willing to spend on this before it becomes cash generating? And that's a very easy thing to track and get everyone aware of.
It is.
Yeah. But it's all about keeping it simple. It's not it's thinking about it in advance and thinking, right, if this doesn't work, or if we can't get it profitable or cash generating within a period of time, we pull the trigger and we don't do it. Or we start trying to tweak it on the way, but we have a final cutoff. This doesn't work anymore.
What kind of strategies or focus, financially or commercially, can the listeners do straight away that has an instant impact? What do you reckon?
I think I'll reiterate the cash point. If you're not looking at your cash balance and trend, that's the first thing to look at and think, okay, how do we improve our cash position?
I quite like that. I mean, look, you're repeating now. So how do we improve? So it's all about improvements.
Yeah.
Number one, look at the cash balance. I mean, I had the 5 things. I'll repeat them again. Look at it.
Yeah.
Gamify it. What's the trend? Set a target. How are we going to achieve this target? Come up with the ideas. Get to work.
Yeah.
And we combine that with your first cycle that you said. End of month report as soon as possible, like at JP Morgan.
Yep.
Make a decision. Have some fun for the rest of the month implement. That you calling it fun, yeah? The implementation, which it is. Business is fun, yeah. And track it.
Yeah.
That you're on track to your strategic goal.
Yeah.
Is that keeping it simple to you? All of that.
To me, it's keeping it simple, and the outcome of all of that is a strong, what we call a strong balance sheet. You've got cash reserves that you're building. You, in theory, don't have the headaches of the cash suddenly runs out or looks like it's about to run out.
Just a second. I love what you said. You just said the word in theory.
Yeah.
It's not reality, though.
Well, is it? Well, if you do all of those things,
it is.
Then yes.
The likelihood is.
The likelihood is, yeah, for sure. No, 100%. Yeah.
That's cool because everybody can do that.
Yeah. And I guess, well, coming back to my JP Morgan thing, so that was my first main job out of studies, and I was in operations and finance, and the thing that was drilled into us, or drilled into me, or I heard a lot, was this concept of a fortress balance sheet. And the CEO of JP Morgan always talks about, we've got to have a fortress balance sheet. Everything we decide on,
really,
got to
beautiful
not focus our balance sheet. And what does that mean? It basically means we've got to have a robust balance sheet, liquidity, which is basically cash, and in the case of most SMEs, got to have enough cash that we can withstand financial shocks and still do deals. So if you're in a position where you've got good cash reserves and you can consistently build cash, you've got that kind of safety net, and if opportunities arise, you can pounce on them, whether that's an acquisition, taking on team members or talent that might have come available, going into different sectors. It gives you the ability to do those things, and that's why you're doing all this. I think the key thing is a strong balance sheet, cash generating business has more options. More people are going to lend to you if you want to borrow money to do bigger things, because you constantly can improve your cash position, and it just gives you more choice and more sleep.
If and when up, more sleep.
Yeah.
This nice phrase what you said though in the middle of all of that. If opportunities come along, it means you can pounce on them, which is cool, isn't it? It means a confidence booster. I was always trained by Brad Sugars, actually, as that whole cash position. You want to be roughly about 3 to 6 times your monthly overhead in cash position. Means you can pounce on opportunities. Yeah. And anything more than that, you can just put into investment. You can go invest elsewhere in another business or in a property portfolio.
No, 100%. And I think that's, there's plenty of ways you can put that money aside. Or if you're the owner or the shareholders, extract
or go and pounce on more opportunities.
Yeah, exactly. Or use it to create wealth in things away from the business, whether that's property or other bits and pieces.
Yep.
And that's 6 months. I think 6 months is a good measure, and it doesn't necessarily have to be in cash. I think half of that in cash, half of it in easy to access liquidity, which could be overdraft or facility from your bank.
That's interesting perspective. So 3 months of it in cash, and 3 months of it in access to more funding.
Yeah, exactly.
The bank will give you or a loan or something like that.
100%. Yeah.
Which to make up the 6 months. Now, what if someone's got an adverse mentality towards risk? Do they need more than that 3 months? Some people do.
Yeah, I think potentially. I mean, if you got even more cash reserves, then why not? For sure. But it comes a point where there's an opportunity cost to having so much cash that you're not doing other things with it. And the idea is, if you're constantly adding to your cash reserves, you can then, capture that cash and do something else with it. So you'll risk, if you've got yourself into a position where you are able to generate cash and your focus is on everything the business does is a cash generating activity.
It does sound glamorous, doesn't it, to have excess levels of cash in the bank? It just sounds a nice too. Yeah. It's also a financial mistake though, remember, because money can make you more money.
Yeah. Yep.
So you can use it to go and make more money, and it becomes a mistake on the other side. It's maybe it's less common, but
that's
maybe it's not.
Where I think
maybe
you need to set a target and say, this is what we should have as our cash reserve. And beyond that, either the business is going to start making some decisions with it, or if you're the shareholders,
we'll make some decisions
and
with
do
it.
some stuff with it.
I'll have a new house.
Yeah, 100%. Yeah, for sure.
Being in business should give you more life. Yeah. Very nice. I got some quick questions for you.
Cool.
What's your favourite book that you've ever read on business?
That's a good question. There's lots I've read. I'm just trying to think. So probably one I've enjoyed the most recently, well, actually it's probably a year ago I read it, was the Nike founder. I've forgotten the name of it now. Do you know the name of that?
Shoe Dog.
Yeah, Shoe Dog. Yeah, Shoe Dog.
Beautiful book. Amazing.
Lots of learnings in that, and also it doesn't always go in a textbook fashion, right?
Yeah, so, it's a really good book. I mean, that's definitely It's almost Hall of Fame category, that book, I think. When I say Hall of Fame, I mean separate bookshelf for the Hall of Famers. You know, you don't just put them in with the normal bookshelf. You get the,
That's
you
it.
know, develop a Hall of Fame bookshelf. You probably will earn a lot more money if you do so.
100%.
All right, what's your favourite movie?
Favorite movie? I think one of my favourites has got to be the Founder, which is the kind of McDonald's story.
So
I like that.
Your favourite book is Shoe Dog by Nike. And your favourite movie is The Founder.
Yeah.
Yeah, amazing on systemizing a business.
Yeah.
You know, Ray Kroc. Wow. It's educational. It's fun. It's educational. Amazing movie.
It is, and there's just so many aspects of that you can kind of
As a
relate
business
to and
owner, you can
understand.
really relate to it, yeah?
Yeah, 100%.
Favourite holiday destination?
So I love being on or near the water. So have I got a favourite place to go?
What's your favourite holiday you've ever been on?
Oh, it's a tough one. To be fair, there's been many. I've been lucky. With how many places I've been to.
You've got a boat.
Yeah.
You've got a few boats.
I've got access to boats, through boat clubs. So I think the UK's got some amazing places to hang out when the weather's good. I like Australia. I've been to a few times. I like bits of Asia, Thailand. Yeah, those are probably mine. And Greece, actually. I did some sailing around Greece, which was lovely. Yeah, too many places to choose from.
Anywhere with water.
Yeah.
If you could have a superpower, what would it be? Aquaman.
There was someone I'd heard, I've forgotten who it was now. Concepts of bullshit, man. This
Detecting.
This whole kind of bullshit, man, of you go into a meeting and just call out bullshit.
Oh, you mean having the nerve to say that to anyone at any level?
Yeah, exactly. Yeah.
Let's just go a step beyond the bullshit, mate. Let's just say having the courage to do whatever's required.
Yeah.
I mean that's a good superpower. Yeah?
It is. I guess sometimes
courage to.
I try to ask those awkward questions, but sometimes that's going a step beyond. But I think sometimes it's needed, right? I think people need to get realistic and be called out in a polite way.
Yeah, look, calling out is one thing for courage. I mean, you've got me on the courage thing. I mean, having the courage to do whatever you need to do to get to wherever you've got to get.
Yeah.
That would be a really good superpower, wouldn't it? Really good. Nice. Early bird or night owl?
Early birds.
How early?
Normally between 5 and 6. I'm up.
Between 5 and 6. There you go. If you could have one day in someone else's life, who would you choose?
Oh, that's a tough one. Do you know what? Sometimes for me, a real big switch off from work and all the complication of that is time I spend with my kids. And I think sometimes just being in the eyes of, they're 10 and 6, but being in the eyes of a 10 or 6-year-old for a particular day just completely refresh and changes you. So
understand what's going on in their heads for that whole sort of parent-kid dynamic. Yeah. What's going on there?
And just their view on the world, that kind of simplistic, just have fun and not take things too seriously. I like that.
Yeah. Having one day, you mean remembering back what it's like to be a 6-year-old again?
Yeah.
Just to remember back. That's a nice thought. I like that. Who've been the three biggest trusted advisors in your life?
Oh, 3 biggest. I think I'm quite lucky that I've got a number of people around me that I would call on or seek guidance, advice from. I'm not sure I could name just 3. I think the important thing for me is having people from different backgrounds, different perspectives to tap into, and some of those people very close to the business, some people outside of the business.
What have you got from them?
And some personal as well.
What do you get from them people around you, them trusted advisors? I
think you can often get, talking from the perspective of being an entrepreneur myself and trying to run businesses and manage people. I think just soundboarding and sense checking what's going through my head, and being able to sound that off someone else and get it either played back to you or
How
some
important
clarity.
has that been for you in developing to where you've got to?
They're really, really important.
Soundboarding, sense checking.
Yeah.
Anything else that you get from your trusted advisors?
I think it's often there's the two things of talking about the things that are not going so well, but also celebrating those successes as well. You've got to do both. Yeah.
Celebrating as well. You're quite a celebrator, right? You like a bit of a party, Rob.
Well, what's the point in working hard, long hours if you don't actually...
What's the best wine in the world? You're a connoisseur, yeah?
I do. I like a range of wine. Do you know what I've been drinking recently, and I'm actually quite enjoying it, is homemade red wine, which is from...
You're making your own red wine these days?
I've contributed to the making process, but it's my partner's father's red wine. He's Italian, so he imports the grapes, makes the wine, and are ready to drink. So
it's strong stuff.
It's strong, but there's no additional things in it. There's no sulfates. There's nothing in it. So it's just...
No headaches.
No headaches, or well, depends how much you've had. But less fuzzy heads. Let's put it that way.
Yeah, it's pure. It's pure stuff.
Pure, and yeah, I've actually really enjoyed it. I do like a nice, well matured red, something that's not been made that summer as well. But I think that I've actually really enjoyed over this summer is actually having some of that back to basics.
Whilst you're on your boats.
Yeah. Well, that's normally a rosé probably rather than a red on a nice sunny day.
So you even have the rosé stuff as well, do you?
I do like the rosé. Yeah, rosé's good.
Yeah,
bit of rosé.
All right. What's the first thing that people should do once they've listened to this?
I think anyone listening to this who might feel they haven't got things completely right, or they're having those kind of sleepless moments around finances, cash, whatever it is just think, have I got the right people around me to make sense of all of this? And if not, go and get some help. Right. And that could be as simple as talking to your accountant. Yeah, accountants are there to support, but often they're not proactive. So,
but it's a valid point, because that's easy to do, isn't it? Yeah. Phone your accountant up.
Yeah. And if you've got,
it costs you nothing.
Yeah. And, I think a lot of accountants know a lot of stuff. And I'm talking about the accountants that do the year-end accounts and stuff. But often they're not asked. Either an accountant or think about getting something more strategic to help run your finance team.
Yeah.
Someone more strategic to run your finance team. Call me. Can I say that?
Yeah, well, you've said it. He's just said it. What did they say? It's easier to ask for forgiveness.
There you go. I'm always happy to talk to someone.
Yeah, of course you are. Help. Look, and you work alongside coaches, don't you?
Yeah, 100%. Yeah. And I think, we talked a little bit about shifting mindset, shifting this. I think part of it is it's all very well working all this out on paper and having a target and all this stuff, but people fundamentally have to change how they do things. And sometimes the most important thing there is that ability to have someone coached and upskill themselves and do things differently. So 100% work with coaches.
Well, look, there's loads in there. It's been really, I love the keep it simple thing, focus on improving margins, profit, cash balance. But my favourite thing is being them little step, end of month report, make some decisions, go and have fun, track it, and then here's the 5 things to do, gamify it. And what I share, I'll share it again. Look at it, cash position or your numbers, gamify it, what's the trend, what's the target, how are you going to do it, what are your ideas, and go get to work. They're my favourite bits. What's been your favourite bit, Rob?
Just spending time with you, James, is great, isn't it?
Thank you.
At the beginning of this, you said you might take some notes, and you said if there's anything good that comes out, I'll take a note. And I was worried there'd be nothing written down, but you've got a few pages there, so it's good. I mean, if this helps anyone by just making them think actually finance is probably something I should really engage with and use it as a tool to accelerate my business and my thinking and how I feel about all this, then that helps. It shouldn't be complicated. It shouldn't be something to worry about. It's something that will help you and your business for sure.
Rob Boll, thank you very much. See you again next time.
Thanks very much, James. Thank you.
Hey there, James here with an exciting announcement. The BizX Awards is coming to the ACC Liverpool from the 18th to the 19th of April with an incredible lineup of speakers. You're going to meet the likes of Stephen Mulhern, Donald Miller, Deborah Meaden, and many, many more. Book your spot right now at the bizx.co.uk. And if you've enjoyed listening to the Business Excellence podcast, make sure to comment your top learnings and favorite moments, as well as like and subscribe. See you next time.